Welcome to your market report for Friday, April 6, 2018. And well, listen, guys. I've been holding off the market report for a few minutes. And the reason why, well, let's start the charts right here. Pow. Now, here's the thing. I've been holding off the market report for a few minutes, and the reason why is because I've been waiting for the Dow Jones a little bit. What I've been noticing is that the Dow Jones almost came into the green a little while ago. It went all the way up to minus 70, I think it was, for a couple minutes, and then it started to retrace back down to minus 145. And so I was waiting just to see if it would go into the green today. So I don't think today's going to be a real big down day, considering what's going on. And this is just wild news, what's going on in China right now, in the United States with this trade war, tariff war, which is heating up. So far, I don't see where it's had a real big effect on the markets at all. It's had a little effect here and there, but it hasn't had a real big shocking effect on the markets whatsoever so far, really. Not too much of an effect anyway. And so the market, like I say, is still treading water. It's finding a range. You notice that the first big shift down in the market, and the next shift up wasn't as big, and then the next shift down was smaller, and then the next shift down smaller. This is almost like aftershocks after an earthquake, where the first big drop, and then you get smaller and smaller aftershocks. Like the market, in other words, is settling down. It's finding a point in around. If you followed it here, you could almost say 24,500, somewhere around there. It's finding a settle down point, or settling down to a certain point. This isn't going to last forever. This is a very temporary thing, that the market is finding a spot where a new equilibrium at a lower price. This is going to be very temporary. This is not going to last for an awful long time, but it's going to last as long as the bond prices continue to hold in around this area. So we're going to take a look at bond prices right now, and we're going to find that they have been holding in around more or less in a range between 2.7 and about 2.95 or something like that. And right now we're in the middle of that range at 2.8 with the U.S. bond, U.S. 10-year. Now, see, the one I'm focused on, the bond yield that I'm focused on is U.S. 10-year, because this is the one that has the most effect on the market. We're going to take a real closer look at the U.S. 10-year and what it's been doing lately. And the reason why we're going to do that is because this is why the market is settling in at this range. Now, we're going to show you, back to the trouble, probably the 3 months would probably be my best chart to show you. Going back, here was the trouble back here. The bond market was on the move, up, 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 up. Then we got that large correction in the market. And ever since then, the market has been settling down into a range. And what has the bond market been doing? The bond market's been just going along, treading water. And so the market is treading water in that new range. It's got everything to do with this bond price, what this bond price did to the market. So until this bond price starts to move, we're going to keep our eye on it. 2.8 right now. Until it starts to move up over 3%, starts to put pressure on the market again, the market's going to kind of just tread water, I believe. I don't believe we're in for any market crash imminently, like in the next 24 hours or anything like that, unless China does something back that's really ridiculous. Now, remember what I said about that. Unless China does something back in retaliation that's really ridiculous. Now, what would really ridiculous be? Well, I can think of two things that China could do back, but there's probably more. that they could do, more than two things, things I haven't thought of, but I can think of two things off the top of my head. One, they got $1.3 trillion in U.S. Treasury bonds, right, that they could sell into the market. That would trip the switch. And the other thing that they could do is they could have an effect on the oil. They're the biggest purchaser of oil in the world, and so if they decide that they're not going to purchase oil or something, say they decide they're not going to purchase U.S. oil or something like that, and they're going to purchase from somebody else or something, if they touch the oil, then there would suddenly be a glut on the market instead of already they're pumping more out of West Texas. I heard an article this morning, they're pumping so much out of West Texas, they're clogging the pipes. West Texas is going nuts. There's more production coming out of West Texas right now than ever. And that's because the price is not that low. It's not extremely low. It's not like it was when it was $29. The price is up in the 60s now. I think West Texas, they have an all-in production cost on an awful lot of their wells, have an all-in production cost of around $40. So in the price in the 60s, they're making about $20 a barrel, you know, and that's enough for them to be pumping it out like crazy, and that's exactly what they're doing. Okay, so now let's take a look at the oil price. Okay. Okay, I'm not on oil. Okay, here we go. Oil. Okay, yeah, there we go. And let's go back a little ways. Let's take a look. Let's take a look at a little bit of a long-term chart. Let's take a look at a 5-year. They're not giving me the 5-year chart. Damn it all. Why aren't they giving me the 5-year chart? Let's try max. Nothing. Oh, that's useless. That's useless. I got a 5-day chart. I got 1 month. 1 month works. 3 months? No. No. 1 month is the biggest chart I can get is 1 month. 1 month out. Well, we'll have to take a look at 1 month out then, I suppose. Over a 1 month period, we see a little drop off in price, but we see a lead in. It went all the way up to $66.37. And at the time, I said it would not go over 70. And that's because of West Texas. But you know what? There's something in West Texas that's called the Red Queen, and it comes out of one of these fables. I think it's Dorothy in Wonderland or whatever, where the Red Queen, they say she's running as fast as she can, or something to that effect. But what it actually means is it means they go out and they add a new well online. And only a couple years pops, the well starts to run out of crude, and they have to go down and they have to refix that well. They have to cap that well off, and they have to bring in these companies in to put pressurized steam and stuff down there to get it going again. And so they got a whole bunch of wells going, okay? They start popping off. Beep, 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 beep. Then they have to come in and redo them all again. So some of these wells that they put on 2 years ago are getting ready to pop off, and you don't know exactly how many. The oil producers know exactly how many wells are going to pop off on them, but it's an awful big cost to come in and have them all redone. I think it costs like $1.4 million or something like that to go in and re-steam the well. They got to drive steam pressure down and get it going again. They can, each time they do that, there's another thing too. Each time they do that with the fracking, they get a little bit less oil, and it needs doing quicker. It needs more steam and stuff quicker. Like, okay, the first time they come in, it might last 2 years and pump thousands of barrels a day, say 2,000 barrels a day or something like that. I'm just making these numbers up, but this is the idea, okay, just to give you an idea. Say the first time they come in, it lasts 2 years, and it pumps 2,000 barrels a day. The next time they come in and do it, right, it costs more to do it each time, too. Next time they come in, steam pressure it and everything, get it going again. It only produces 1,000 barrels a day, and it needs doing a year later instead of 2 years later. And the next time they come in and do it, it's only good for 6 months, and it's only producing 500 barrels a day. Finally, in the end, they get to a point where it's not worth steam pressure in the thing anymore because it's been tapped out. And so they have to cap it off, and that's the end of that well. And this is where they go with this, because constantly they got these wells shutting off ahead of them. And they got to keep running as fast as they can, trying to steam pressure all these wells all the time to get more oil up out of the ground. And it costs more and more money. And that line that they got right now are around $40 a barrel, all in production costs. Next year it'll be 45 or 46, and the year after that it'll be like 54, and then the year after that it'll be like 65. You see where I'm going with this? Ultimately, West Texas oil is going to cost more and more money in the all-in production costs. So this year they're making money in the 60s, right? 2 years from now they're going to have 80s to make any money. Otherwise, they're going to have to cap all these wells off. It's just simple math. We're going to be looking at higher oil costs a couple years down the road from right now. It's just simple math, and everything's costing more anyway. You know, they can't support these low oil prices forever. You're going to see gas at the pump slowly start creeping up again in a year or two down the line. So if you're thinking about buying that SUV or a Hummer or something like that, think twice. Better yet, go out and get yourself a car that's easy on gas. Go out and get yourself a Toyota Echo or something like that. A Gecko. So my dad calls them kick butts, you know, because the back end's all squinched up like that, and they get the little wheels on them, you know, little tiny wheels on them, you know, these little cars that are easy on gas. Anyway, let's go over to cryptocurrency right now. We got cryptocurrency here. We're looking at Bitcoin, and this is Bitstamp. We're at 66.23. We're going to go to a little bit longer range chart here, and we're going to show you what it's been doing. Well, we're going to need a longer range than that, I think. Well, no, this one will work. There was a peak of $19,666 at Bitstamp, and what we see is that it come down here and made a bottom at 59.20, right? It's coming down right now to make another bottom. So this would be the second bottom. Okay, that's obvious. Look at it. It come down from a huge correction in price, come all the way down to $5,920, and it made a bottom. And see, it went back up to 11,000. Now it's coming down here for a second bottom again. And you can tell that she is starting to get kind of tight. It's getting that look, the way she's bouncing here, kind of bouncing like a ball here on the bottom. She's starting to test the feel for a bottom. She's feeling for a bottom at 66.45, and it's not far off. Okay, what's it right now? 66.15. It's not far off of the 59.20. I could see it going down and bouncing off. It's bottom bouncing. It's bottom bouncing. And how many bottoms will it make before it finally decides, hey, you know what? We're ready to go back up again. Now, here's the thing about all this. If we get a big market crash, I'm anticipating that could drive the price of Bitcoin down considerable. Drive it down. It could be a driving force to drive the price of Bitcoin down. When I'm talking about Bitcoin, I'm talking about all the cryptocurrencies because they all move together, you know. And so if Bitcoin goes down, because Bitcoin's got over 40% dominance in the market, they'll all move down together. So this could be a fantastic buying opportunity if we get a market crash in the not too distant future. And I think that's a very distinct possibility that we're going to get a stock market crash, and that stock market crash is going to turn the central banks around on their monetary policies. That's when we're in for our hyperinflation. And hyperinflation would be a massive driving force behind cryptocurrency. Massive, massive. And behind the gold and silver, too. What we really need is we need this hyperinflation to clear the system. of the impurities that's in the system right now that were caused by the 2008 crisis that were never purged out of the system. We need a massive hyperinflation and a reset. That's what we need, and that's what we're going to get. It's in the cards. It's baked into the cards. It's coming. But the question is the timing of exactly when that's going to occur. So now let's take a look at the U.S. dollar index, 90.21. You know, and if we get a market crash, I'm expecting the dollar to move up as a flight to. And people want to be holding cash when things are crashing. They always want to go into cash. They always run back to cash. They do love cash. You know, even in a hyperinflation, they're not going to give cash up until the very end. They love cash. They've loved cash. They've had a love affair with it for so long. They're not going to give it up to the very end. They're not going to give it up until the government comes out and says, hey, you know what? This cash is almost completely worthless now. We're bringing out the new dollar coin. You have 3 months to turn in your cash, or we're going to invalidate your cash, and it's not going to be legal tender anymore after a 3-month period is over. And then they're going to be very reluctant to turn it over. They might even start a black market trade in cash. U.S. cash. It might become a black market item after the and in fact, this is very likely that this is probably the way it'll go, even after the U.S. government says, hey, you know what? In 3 more months, your cash is worthless in the United States of America. No store is going to take it or anything, right? There's so much cash, United States cash, floating around all out there in different countries and stuff and everywhere that they're using it for money. They'll probably continue to use it for money, even though the United States has said, hey, you know what? It's over. It's dead. It's not accepted for U.S. legal tender anymore. It'll still be used in trade in other countries that use the dollar for trade. The dollars are floating around out there, and they're going to continue to use them. But their value, what's their value going to be? It's going to be really like they're going to be wadded up and sold by the pound, just like the Venezuelan currency is right now. They're going to be very, very, very low value for it, but it'll still be used in trade because it's just because they've been using it for so long. They're not going to give it up just that quick. You know, even though the United States government will come out and say, hey, you know what? It's dead. It's over. We're scooping it all up and we're going to burn it all. And they might burn massive quantities of it. They might burn it. You know, it's quite seriously. And they might burn massive quantities. And you know what? If they burn massive quantities of it, they're going to bring the price of it back up again on the black market. This is something that just occurred to me. Hey, you know what? The United States government recalls it all. They bring out the new crypto coin that's the equivalent of the dollar. It has value. The old U.S. dollars then at that point in real dollars, tangible dollars you can actually hold in your hand as physical cash. Not the dollars in the bank, because they'll extinguish all of them. They'll just say, well, okay, the time's expired. We gave you 3 months to turn in your bank account and have it exchanged into the new crypto dollar. They just extinguish all of those bank accounts that haven't been exchanged over. Believe me, they can do this. They are so arbitrary. The government is so arbitrary. And look at what they did in India. They did this in India already. It's a test case. They've already done it in India. They said, Modi, I think his name is, he went out and said, okay, you guys turn in your, 500 rupee or whatever they use in India, bills. Turn them in or that's it. Next Tuesday, you know, or whatever, we're going to extinguish them. And they're not going to be able to use them as currency here in the country anymore. And what happened? A lot of it went back into a black market and whatever. That doesn't mean that the same thing won't happen to the U.S. dollar. I mean, when they decide to be arbitrary and extinguish the U.S. dollar and bring out their new Fed coin or whatever in the frig they're going to call it, that doesn't mean that there's not going to be a black market worldwide for the old physical dollars. And if they extinguish a whole bunch of them, I mean, they might extinguish so many of them, they might have bulldozers coming in, pushing them into a giant furnace. That's just going to make them scarcer worldwide and bring the price of them back up. after the hyperinflation's over. Now there's a myriad of ways that this could actually play out, and we're going to have to wait and see exactly how it plays out, but it could be very interesting, you know. Anyway, we're living in interesting times. Who could have predicted this crazy trade war we got going on right now? And it come out of nowhere. A few weeks ago, we weren't in a trade war. Now they're firing back at one another every day, every second day, with a new big tariff. And we don't know where it's going to end. It could continue to escalate. It could be like I said last night in my program, could be a monster of a black swan. Well, it hasn't really affected the market that much yet. Not yet. We got to wait and see on this one. Cryptocurrency market capitalizations. Here we go, boys. We're looking at $248 billion, and everything's in the red. And like I say, it looks to me like it's making the second bottom. Bottoms are a good time to buy on anything. Guess what I did? I told you that I like Litecoins. I got a couple Litecoins. I paid 118, and today they're 114. Whoop-de-doo, like I'm really all that worried. They lost $4. I don't care. I'm HODLing this. Now I've got to a point with the cryptocurrencies now. I sold out everything I had in the past, and now I'm building back. And even though I might have purchased these at a little bit of a high price because we might have a lower price coming, I've started buying them again and collecting them, and I'm not selling this time. This time around, I don't care. I'm going to do just like I do with when I buy a piece of silver. I don't care how low it goes. HODL to the end, boys. HODL to the end this time, because this is the last time cryptocurrency, if they is going down, they're going to go forever up at a certain point when the hyperinflation starts, and you're going to need them. You're going to need them just like you need your gold and silver. You want to start, if you're a gold and silver guy, you want to start dabbling in this stuff. You know, you go out and you buy that pack of cigarettes, right? Or say you go out and you buy that lottery ticket. Spend equal amount of money, or spend your lottery ticket money on this cryptocurrency and start playing with it. You know, the money you waste on that burger that you don't need, that's all dripping with grease, you know. Don't have that burger. Spend it on cryptocurrency. $20 here and $20 there. And the first thing you know, you'll have a nice little portfolio of cryptocurrency. You'll start to understand how to use it. You'll know how to use the wallets and everything else. And don't be so Peter Schiffish about it. You know, start to open up to it a little bit. And the first thing you know, you'll start to like the stuff, and it's kind of fun. Kind of fun to play around with it. You could even mine it a little bit. Maybe you got a laptop and hook your laptop up so it's mining Bitcoin or whatever. And it's kind of fun, even though you might be only making like 0.0000001 a day, you know. It's fun to see that 0.0000001 a day come in, and the next day you got 0.00002. You know, it's fun. It's like you're having fun. It's just something to do. You know, it's like a little hobby you can have. You know. Anyway, listen. Thank you guys for listening to the market report this morning, and we'll catch you Monday. Or if Mondays, I gotta check every frickin' Monday. They have a stupid holiday. I gotta check on Monday just to see what's going on, see if it's a holiday. But if it's not a holiday, I'll be here, because I'm here watching these markets 24/7. The markets that are closed, I don't watch them, but I watch the markets that are open. Like, that's why I love Bitcoin. I'm always out there watching it, see what it's doing. Oh, yes, you know, I love these markets. Well, listen, we'll see you guys later. Bye-bye for now.